Welcome back to Market Minute USA. Today we are stepping back from the 60-second chaos to look at the bigger picture. If you've been watching the charts this week, you saw something historic. The Dow Jones Industrial Average finally touched the 49,000 mark. On the surface, it looks like a celebration. But behind the scenes, Wall Street's elite are whispering a very different story. Is this a breakout, or is it the ultimate bull trap of 2026? Today, we are going to break down the three massive pillars that are holding this market up, and more importantly, the cracks that are starting to show. We'll look at why Nvidia's dominance might be hit by a new regulatory wave, why the recent inflation data is a silent killer for your portfolio, and what the big banks like JP Morgan and Goldman Sachs are doing with their cash right now. If you have even $1 invested in the US markets, you cannot afford to skip this analysis. Let's talk about that 49,000 level. Psychologically, these big numbers act like magnets. They draw in retail investors who are afraid of missing out, the classic FOMO. But when we look at the market breadth, we see a troubling trend. Only a handful of stocks are actually driving these gains. While the index hits new highs, more than 60% of small-cap stocks are actually trading below their 200-day moving average. This is what analysts call a top-heavy market. In 2021 and late 2024, we saw similar patterns right before major corrections. When the foundation, the smaller companies, starts to crumble, the giants eventually fall too. We have to ask, is the US economy truly stronger, or are we just seeing a concentrated bubble in AI and energy sectors? The recent surge in oil prices due to the South American supply chain crisis is adding fuel to the fire, making it harder for the average company to maintain profit margins. Now, let's pivot to the tech sector. The CES 2026 event was supposed to be a victory lap for Nvidia. Their new Blackwell 2 architecture promised 10x efficiency. But then came the Tesla software announcement. Elon Musk is pivoting Tesla away from being just a car company to becoming a direct competitor in AI compute. This AI arms race is forcing companies to spend billions on research and development, which is great for innovation but terrible for short-term earnings. Investors are starting to realize that the low-hanging fruit of the AI revolution has already been picked. Now comes the hard part, monetization. If these companies can't show real-world profit from AI by the next quarter, we could see a valuation reset that would make the 2000 dot-com bubble look like a playground. We are seeing early signs of institutional distribution, meaning the big whales are selling their shares to retail buyers while the news is still positive. That is a massive red flag. The most dangerous factor right now is the inflation trap. Everyone expected the Fed to cut rates aggressively in 2026. But the data we got this week proved otherwise. Inflation isn't just sticky, it's rebounding. With energy costs rising and the labor market remaining unexpectedly tight, the Fed is backed into a corner. If they cut rates, inflation spirals out of control. If they keep them high, they risk a hard landing, a full-blown recession. This uncertainty is why the bond market is so volatile right now. Smart money is moving into defensive assets. We've seen gold hitting new highs, not because people are greedy, but because they are scared. When the 10-year Treasury yield starts spiking alongside the stock market, it usually means a liquidity crunch is coming. You need to be prepared for a scenario where the market drops 10% in a single week. So, what is the game plan? First, don't panic, but do get prepared. This is the time to audit your portfolio. If you are heavy on speculative tech stocks with no earnings, you might want to take some profits. Keep a dry powder, that means cash, ready on the sidelines. The best fortunes are made during the bloodbath, not at the peak. Watch the 48,500 level on the Dow very closely. If we break below that on high volume, the trap is officially sprung. Thank you for staying with me for this deep dive. Our mission at Market Minute USA is to give you the truth that mainstream media won't tell you. If you found this valuable, hit that subscribe button, like the video, and most importantly, comment below. Are you buying this rally or preparing for a crash? I read every single comment. Stay sharp, stay profitable,